Good morning, everyone, and welcome to the ProPower Hour webinar looking at your client's cash flow. My name is Grant Chapman, and I work in the advisor marketing team, and I'm your host for today's session. It's great to have you join us today. Before we begin, I'd just like to acknowledge the traditional owners of the land on which we meet today, the Gadigal people of the Eora Nation, where I'm here in Sydney, and to pay my respects to elders past, present, and emerging. In today's webinar, we're going to take a look at some research around the cash flow and invoicing issues that many of your clients are experiencing, how you can help them improve their cash flow position, and cover some of the reports and tools in QuickBooks Online that can help you understand their current cash flow situation and model their future situation with some really easy to use what-if scenario modeling. You're also going to hear from the team at Commonwealth Bank with some insights into the needs of small business owners, including borrowing frustrations and how their solutions can help if cash flow is something that's keeping your clients up at night. Now, it's likely that everyone on the call today is aware of Intuit's flagship product, QuickBooks Online, given that it's used by more than 300,000 accountants and bookkeepers and more than 7 million small businesses all around the world. Importantly, it also includes a number of features that only accountants and bookkeepers can access to really help you power through working with your clients' books, like books review or prep for taxes. Then we have QuickBooks Online Accountant, which helps you manage your practice as well as your clients. It helps you keep on top of your workflow, manage your projects and tasks, and track your time and billing. On the compliance front, QuickBooks Tax powered by Lodgit is a really powerful online tool to help you manage those tax and BAS preparation and lodgement needs. One of the key features that makes QuickBooks Tax unique is the ability to import data from various accounting systems, not just from QuickBooks Online, so it actually works for all of your small business clients. Before we get started, let me take you through some really quick housekeeping. We've got a really large crowd here today, so we have you all on mute, but we do have a Q&A session at the end of the presentation. So if you have a question, please submit it through the Q&A feature in the bottom right of your screen, and we'll aim to answer as many questions as we can. Today's event is being recorded, so we'll provide everyone who's registered with a copy of that recording by email. So watch out for an email in your inbox to let you review any of the content that we share today, as well as share it with your other team members. If you're having any technical difficulties with not being able to hear or see the presentation, we'd suggest you refresh your browser, restart your device, or try a different device. Again, though, you will receive a copy of that recording of the session, so while it's not quite as good as the live thing, at least there's no need to panic that you'll miss out on anything. So with the housekeeping out of the way, let's jump into today's session. Today you're going to hear from Elizabeth Huxley, the General Manager of Working Capital at Commonwealth Bank. Elizabeth has more than 20 years experience in the finance industry with expertise in markets, payments, transactional, trade and working capital. Elizabeth is currently the General Manager of Working Capital for the Commonwealth Bank, where she works closely with business and product development teams to deliver solutions that support customers' growing need for working capital and trade funding. Before we get to Elizabeth, though, I'm going to take you through a bit of the research that we've just released here at Intuit QuickBooks, looking at the impact of unpaid invoices on client cash flow. As I said, I'm Grant Chapman. I work in the advisor team here at Intuit QuickBooks, and I'm a lifelong advocate for small business and advisors working in small firms. I started my career in Perth in Western Australia with Australia Post before I moved to London working in the legal technology sector, and then returned to Sydney working for Thomson Reuters. After that, I spent 8 years at the Tax Institute, helping tax specialists stay up to date to learn and grow, before I joined Intuit, where my role is really focused on helping our advisors grow their business and stay up to date with recent changes in the profession. Let's get into it. Now, accountants and bookkeepers have been at the forefront of helping small businesses grapple with the ongoing uncertainty in all sectors of the economy, and the advice that you give your small business clients is really pivotal in helping them manage their cash flow in order to be as resilient as possible. We've conducted research here recently at Intuit, and what we saw then was that the majority of small businesses, around 60% of them, have experienced a cash flow issue at some point during their company's history. And unsurprisingly for many of them, it's occurred in the last 2 years. Last month, our advisor segment lead, Damien Greathead, was quoted in Accountants Daily citing other research that showed that more than 3/4, 76% to be exact, of SMEs expect that they would hit a cash flow crisis during 2023 as inflation continues to bite. Now, as advisors, you know only too well that the impact of cash flow issues can be wide-ranging and really weigh on small business owners personally. The ripple effects of this type of stress can be felt far and wide. It impacts relationships, families, and their futures. And this expected lack of cash flow is meaning extra pressure for Australian small businesses at a time where cost of living pressures are already biting. We've just released some new research in the last couple of weeks as well that looks specifically at the impact of unpaid invoices on cash flow amongst Australian small businesses into the end of this calendar year. And what it's found is that nearly half the small businesses, 46%, are expecting that the volume of unpaid invoices that they're dealing with is going to create some significant financial pressures before the end of this year. And this cash flow is affecting their ability to pay suppliers. A little over a quarter, 28% of small businesses reported that they have at some point missed a supplier payment or a deadline due to lack of cash flow from unpaid invoices. And we're increasingly seeing small business owners resort to having to use their own personal funds to cover cash shortfalls when they're paying suppliers as a result of those unpaid invoices. And when you start to quantify it, that research showed that small business owners expect to see on average almost $9,000 owed in unpaid invoices by the end of 2023. That's close to $22 billion owed all across Australia. And it showed that your small business clients are expecting to be dealing with about eight unpaid invoices between now and the end of the year. Just under a quarter, 23%, said that their experience with unpaid invoices has worsened since last year. Now, if you were looking for a silver lining, 58% said that their experience with unpaid invoices remained the same as it was last year. But things weren't necessarily too rosy for small businesses last year either. And when it comes to paying their suppliers, almost 4 in 5, 78% of SMBs said that they've paid invoices late themselves. So you can see that there's a knock-on effect here. I want to come back to some of those human impacts briefly. Chasing invoices chews up time. Figuring out how you're going to pay your suppliers and your team when cash is tight creates stress. A third of those in our research indicated that they've experienced additional stress due to the volume of unpaid invoices that they're dealing with. And you already know the hours that your clients are putting into running their small businesses, but our research shows that nearly 7 in 10, 67% of the small business owners are seeing their personal time being eaten into just to get on top of business admin. We also saw 60% of small businesses report that they manage business admin tasks such as processing expenses and invoices while working virtually or on the go. And 76% said that managing admin on the go can be a real struggle. Now, what was really interesting in the research was that of the businesses surveyed, 29% only have an accountant or bookkeeper to assist with tax time, not as an ongoing relationship through the year. So now is really the time, and we're really advocating for small businesses to be out there starting those conversations with their bookkeeper, with their accountant, to get that support and get ahead of the problem. Equally, I want to encourage you, the accountants and bookkeepers on the call today, to take a proactive approach and start contacting those small business clients that are on your books, particularly those that you know that you only see at BAS time or at tax time, because it's going to be really, really key in helping them with their cash flow, in deepening those relationships with them, but also alleviating some of those pressures, so that when tax time does roll around, you're a bit ahead of the game. We've seen that in previous research too, which indicated that only 30% of small businesses are seeking help from their advisors on improving their cash flow situation. And that's a little bit shocking, a little bit worrying, because like we saw, double that number, 60%, are already saying that cash flow is an issue, and 46% are already really struggling with it due to unpaid invoices. So it's clear that you as advisors have a really important role to help to play in helping with those clients with their cash flow and their invoicing. So today we're going to look at how you can go about providing that help and touch on some of the key tools in QuickBooks Online, including the invoicing tools and the cash flow planner that can make the process a whole lot easier. If you're not already using QuickBooks Online, what we're going to cover today will still be applicable to your clients no matter which solution they're using, so don't worry about that. We would just kind of like to phrase, before you can advise your clients on going about adapting to these changing conditions, you're going to really need a clear picture of the current state of their business. So let's have a look at how you can get that picture. When you start to dig into the causes, unsurprisingly, it's a decrease in sales or margins that's usually reported to be the main contributor. It's a sign of the common challenges that are facing small businesses in our high inflation post-pandemic economy. Naturally, we are seeing consumers tightening their purse strings in responses to the cost of living pressures they're facing from inflation, and then equally things like increased rents and increased power bills are just eating away at margins. Unfortunately, those challenges don't stop after a sale has been made. More than a quarter of small businesses out there, they're just not getting paid according to the agreed terms. This is another major contributor to the problems with their cash flow. For some businesses and sectors, payment delays of even just a day can have a substantial impact and add material stresses. And obviously, the more time that's spent managing money, managing cash flow, the less time business owners can invest in what actually matters to them, serving their customers, growing their business. Now, if you're a business owner, and especially if you're running your own practice, you know how important it is to know your numbers. And I'm sure you're already telling your clients this, but cash flow is the single most common pain point of any business. Almost every potential issue out there in a small business points back to poor cash flow, or worse, no cash flow at all. So whether it's paying bills, hiring, stocking more products, whatever it may be, cash flow is generally the root of it all. As advisors, one of the best ways that you can actually help your clients is in navigating the money waters of poor cash flow and getting to a place of consistent positive cash flow. And this requires consistent monthly management. And I want to talk through a high-level 4-step plan that can really help you do that before we dig into a few specifics. First up, you're going to need that view of the landscape, by really taking a look at the year-to-date balance sheet and profit and loss. Now, this is going to give you that better understanding of how funds are moving through the business and an accurate picture of their cash flow position. Using historical data from the financial statements provided, provides a solid basis around the finances and the current state of affairs. Blindly making adjustments without knowing what's already in play can lead to cash flow struggles further down the road. Annualizing what you know is really key. Once the year-to-date financial statements have been pulled down, the next step is to annualize them out or project them forward. Now, this is the process of spreading the expected revenue and spend out across the remainder of the year. But before any projection changes can be made to the revenue or expenses, you need a clear picture of what the cash flow will look like if everything stays the same. And if both revenue and expenses continue as is, what's the effect going to be there? Knowing and understanding the effects of your client's current position, they're going to help you better advise them on the adjustments necessary to ensure that they don't experience cash flow pain in the future. So now it's time to start the conversation. Having those conversations now and asking those questions is going to give you the insights that you need on how you can actually start to modify the current and future cash flow position. In essence, you'll take what you know, you'll drop those figures into the respective periods. If you know that they're going to have a contract that only lasts 6 months, putting those figures in the appropriate month. If they expect new business through the door, entering the cash amount, not the sales amount, in the month that they expect it. A key point for this step is really starting to distinguish between the sales revenue and the cash inflow. Budgeting obviously deals with the sale amount, and cash flow projections deal with the inflows and outflows, which is the movement of the money. So if they sign a contract this month, but the first payment isn't expected for 90 days, then you would enter the first payment received in the 3rd month from today. There's always going to be a number of factors at play that can change the expected inflows, and they can do it abruptly, they can do it frequently. So we recommend that you update those amounts monthly to be sure that you catch those potential negative cash inflows and impacts as soon as possible. Finally, revise the plan for those expected cash outflows. This is where those tough decisions have to be made. Essentially, where you're at now is you've got a better sense of how the cash inflows will occur or not occur, and you really need to start adjusting those expenses accordingly. Under a normal circumstance, this would merely involve shifting expenses from one month to another to match up with the income changes in step 3. Other times, it involves conducting a bit of a cost audit, reducing expenses either temporarily or permanently because the cash simply isn't there or it won't be there in order to cover those costs. Once you've worked through those steps and have that high-level view of your client's actual cash flow situation, this is where you can start to add more value and really build on your role as their trusted advisor, but also open up some new opportunities for them to grow and succeed. And to do this, there's generally 7 key steps that are involved in turning a cash flow situation around. First up, it's about helping them to make it easier for their customers to pay. Your clients are absolutely spoiled for choice when it comes to payment solution, contactless, mobile, third-party payment platforms, Bitcoin. Work with them to understand what they're using, if it meets their customers' needs, and importantly, to understand the fees that they're incurring on a monthly and per payment basis. Simple things like passing those payment provider fees back onto their customers can result in significant cost savings at the end of the month. If your clients are using QuickBooks Online, they can send invoices that include a Pay Now button so that their customers can make instant payments using their credit or debit card or through payroll. And I'm going to come back to those tools in a second. Next up, you're going to want to explore if they can actually incentivize their customers to pay on time. Although offering every client the same terms is undoubtedly common and simpler, you could be missing a trick out there. Differential pricing, early payment bonuses, and late payment penalties are all proven methods for improving cash flow. The next step is to look at those payment terms that they're offering. This is a bit of the old carrot and stick approach that offers those discounts for early payments and penalties for their later payments. And they also can have a significant effect on improving how quickly invoices are paid. Then it's down to reviewing their accounting software settings. Training your clients to get the most out of their accounting software is key. Make sure that they're using key features like recurring invoices, payment reminders, and even things like the QuickBooks Online mobile app. Encouraging your clients to send invoices on the go as soon as the job is complete, rather than waiting to the end of the day or the end of the week, really can lessen the risk of things falling through the cracks, and it can see them getting paid faster. As we saw in our research, small businesses are really struggling to manage that business admin on the go, and the QuickBooks Online app it offers a really tailored, streamlined way to do that in a really effective and efficient way. For those medium-sized clients that you have out there, or those that do a lot of work for the government, you can look at solutions like e-invoicing, which can dramatically reduce payment delays. They send invoices that land directly in a customer's accounting system, which simplifies the approval process and sees invoices paid faster, again, improving your client's cash flow. QuickBooks integrates with a number of e-invoicing providers seamlessly out there, like Link4 or Luca Plus. If you visit apps.com, that will show you all of the apps that integrate with QuickBooks Online, and you can narrow it down to payment providers, and you'll find all of the e-invoicing providers listed there. Taking advantage of the settings in the tools that they already have, looking at new ones like e-invoicing, all of this can take a lot of the pain out of chasing unpaid invoices up, and it increases your client's collection rate, but it also frees them up. It frees up that time so that they can focus on value-adding tasks like servicing their customers so that they can keep their business ticking over. Next up, it's about looking at cost savings. So when you've actually looked at expediting the money coming in, the next step is to really look at the money that's going out of the business. And payroll is often the largest outgoing for any business, and it's important to get a handle on it early. Payroll costs have increased recently. There's been an increase in the superannuation guarantee from 11% from 1st of July this year. Not to mention, we are seeing employees asking for raises to keep up with the cost of living increases. Encouraging your clients to analyse the needs of the business and perhaps look at options like shifting some roles into a part-time model, even if just temporarily, it can help. There's also other options that you can explore with your clients. Could they, for example, encourage more members of the team to work from home, for example? This can have a flow-on effect in reducing office running costs, or even enabling a move to a smaller premises at reduced rent. From there, it's about considering the impact of new investments and new assets. Looking closely at your clients' plans for upcoming capital expenditure before committing to any new expenditure, just making sure that your clients' cash reserves and cash flow forecasts can accommodate those purchases if situations change. Again, the tools in QuickBooks Cash Flow Planner are really great for this kind of what-if scenario planning, and I'll take you through those in a minute. It's also important to work with the clients on the instant asset write-off scheme that offers small business tax breaks on eligible purchases of up to $20,000, because that threshold is significantly lower than the breaks provided by the previous temporary full expensing model, which allowed businesses to claim an immediate tax deduction for any eligible asset regardless of value. The $20,000 threshold does, however, operate on a per asset basis. So that means small businesses can instantly write off multiple assets. It's important to note, though, that this bill is still before Parliament and hasn't yet been legislated, so plan ahead, but act accordingly. Finally, working with suppliers and lenders and government agencies to explore options for deferring payments or restructuring terms and rates can often help. You can use the transaction detail by account report in QuickBooks Online, filtering by supplier, to work with your clients to understand which suppliers or which lenders they should contact to have those discussions. help your clients to understand how they can also leverage financial services too. There's a whole host of new and innovative solutions out there that can help them get their cash flow back on track. And shortly you're going to hear from Elizabeth Huxley of Commonwealth Bank on some of their insights and their solutions. Cutting unnecessary spending. Look, it might sound obvious, but of all the ways to improve cash flow, this is one of the most effective ways to make a difference quickly. Meals and entertainment costs are often, and unfortunately, one of the first areas that gets cut, but suggesting that clients minimise spending in this area for the next few months can result in significant savings. You can always use the transaction detail by account report in QuickBooks Online to quickly see what your clients are spending on those kind of meal and entertainment expenses too. You can use the same report to look at subscriptions or memberships that may not be necessary in the short term that can be cancelled or suspended. Finally, and this is often the most controversial option, the same report can be used to analyse marketing and advertising costs. Now, while these budgets typically have a little bit of flexibility in them, it's important to work with clients to understand the flow and effect to sales. If you reduce your marketing budget now, what is the flow and effect going to be down the track for sales, and what's that impact on their cash flow going to be in coming months and years? Lastly, you need to be making cash flow forecasting an always-on activity. This process shouldn't be a one-off. It's important that you've built this process into your client work so that it becomes a regular and ongoing process, and one that becomes ingrained with your clients as they make decisions about their business. On the next slide, we're going to look at the cash flow planner in QuickBooks and how it can do just that, and how it can give your clients a really clear understanding of their cash flow situation and let them model the impacts of various what-if scenarios. Preparing and analysing business cash flows and forecasts is optimal if it's performed monthly. Weekly is best, quarterly is reasonable, but it should never be left to once every 6 months or just at the end of financial year. And again, when we saw that research that so many small business owners are only engaging with their accountant or their bookkeeper at tax or BAS time, it's really unlikely that they're doing any kind of cash flow analysis on their own on a regular basis. And I guess lastly, don't forget that seasonal fluctuations can leave some businesses quiet periods, short of cash when the bills start rolling in. So taking a more strategic approach to cash flow management can prevent this from happening. Ultimately, you should be working with your clients to ensure they have an optimal working capital ratio between 2 and 0 and 1 to 2 to help better manage the day-to-day operations of running their business. Now, we've just gone through the process and some of the reports that can save you time and give you a really detailed and complete picture of your client's cash flow situation. So I just want to take a minute to cover quickly the invoicing tools in QuickBooks Online and a little bit more depth here because they can have a real impact on improving the state of those unpaid invoices. Our data shows that small businesses can get paid 2 times faster with automated invoice processes. First up, as I mentioned, your clients can add that Pay Now button to their invoices that are sent from QuickBooks Online so their customers can make those instant payments using credit cards, debit cards, or PayPal. As I mentioned before, they can also send their invoices on the go using the app, creating and sending customer invoices anywhere from any device. There's also a range of automation features that they can take advantage of to schedule reminders for customers for either upcoming or overdue invoices. And they can set up recurring invoices as well. So automating their invoicing process to save time and ensure accuracy for customers so that they bill regularly so that they can just focus on running their business. Finally, the progress invoicing feature may not be one that you know about, but a really powerful tool. Your clients don't need to wait until the end of a project to get paid. Progress invoicing makes it easy to split up estimates into multiple invoices based on project milestones, stages, or the percentage of work completed, bringing in cash now, not waiting until the end of the project. Reminding your clients about these tools is a really simple way to set them up for success and really help them improve their cash flow situation. Okay, let's have a very quick look at the cash flow planner in QuickBooks Online before we hand over to Elizabeth. The cash flow planner uses historical data from the accounts clients have connected to QuickBooks Online to help forecast future recurring income and expenses. It tracks their bills with the supplier's credit terms, and it lets you move the dates of when payments are due to really understand the impacts of those transactions on your client's cash flow. Setting up the cash flow planner is straightforward, and it lets you fine-tune your forecast. It also lets you add hypothetical money in and money out situations to get a better understanding of cash flow up to 15 months ahead. So it's pulling in a whole host of data from bank accounts and credit cards, sales and invoices, expenses, bills and payroll, GST and tax, as well as customer details. And it uses your client's bank and QuickBooks activity to predict those money in and out activities. The great thing is that those adjustments that you make in the plan, they won't actually affect your accounting in QuickBooks. They won't impact your chart of accounts or online banking or transactions. There's also a smart predictions tool that sits behind it that makes it really easy to see when invoices are likely to be paid. It factors in your clients' regular late paying customers using their transaction history. So knowing where your client's business is going really helps you to help them budget wisely for anything that's ahead. That's the QuickBooks Cash Flow Planner in a nutshell. It is provided as a part of QuickBooks, a QuickBooks subscription already, so it's there ready for you to go work with your clients on. And it's really a great way for you to provide some comfort to those clients about what the future state of their business might look like. And it really helps you take that proactive role in helping your clients beyond just at BAS and tax time. Now, we've spoken a lot this morning about what we can do to get a clearer picture of a client's current cash flow situation, how you can work with them to improve it, do that future state modelling. And now I'm going to bring Elizabeth Huxley, General Manager of Working Capital from Commonwealth Bank, onto the call to dig into not only what they're seeing amongst Australian small businesses, but how their Stream Working Capital solution can help you to work with your clients to unlock cash that's tied up in all of those unpaid invoices that our research looked at, with a digital cash flow solution that's connected to their business accounting software. Elizabeth, I'll hand over to you. Thanks.
Great. Thank you. Thanks so much for having me. I'll just move along the presentation. So yes, thanks again. It was really great to hear from you about the impact of invoices and the impact that it can have on small businesses if they're paid late. But we're going to talk about today the impact that you can have on your invoices when you use them for funding, which is really exciting. So using those healthy invoices as well. So we're going to cover off on that today. But I'm going to start with some trends. So we're going to talk about what we're hearing and seeing from our customers at the moment. I'm then going to spend a little bit of time talking about our reimagined invoice finance offering, which you heard Grant talk about briefly there, being Stream Working Capital. We're going to jump into some customer stories, and we've got a few videos along the way. And then at the end, we'll finish with some questions. Great. Current trends. So at the moment, what we're hearing and seeing from our customers is obviously the impact in terms of the economic environment that we find ourselves in. So being, inflationary, employment is still a challenge, and economic growth is definitely starting to slow as well. Interest rates are really continuing to impact small businesses and all businesses, to be honest, and particularly as they continue to rise with the expectation of potentially a few more to come. Supply chain disruption and delays, whilst that's easing a little bit, it's still causing some concerns for our customers. And in terms of environmental, social governance, definitely that's continuing to be really front of mind for our customers. But in terms of, you heard from Grant before some of the stats around, and we've got similar surveys that we're involved in as well. But, the first one being that working capital remains the primary reason for SMEs to get finance. So Grant talked a little bit before around, potentially cash flow crisis coming in. We don't see that, or may not word it that way, but we definitely see a big demand from our customers around working capital, and we expect that to continue. But saying that, 33% of SMEs are looking to grow in the next 12 months, which is really, really fantastic result. But 96% of our customers are confirming, those that were surveyed are confirming that the cash flow is really important if you can fund it without bricks and mortar. So we'll talk a little bit around invoices and how we can use those, but the importance of having flexibility in our offering to customers that don't require just bricks and mortar security. But if we can take that to the next level and then actually have it as pre-approved lending, that's where we're really going to hit the sweet spot with our customers. Do we understand them? Do we know what their receivables book looks like? And can we actually pre-approve limits? So that's really where we're trying to get to with Stream Working Capital and our acquisition of Waddle, which I'll talk about a little bit later on. But that's the current trends of what we're hearing and seeing. Sorry, I've got to click across my slide there. Hopefully that's going to change for you. My clicker doesn't seem to be working. I'm not sure. There we go, Stream Working Capital. So what I wanted to spend a little bit of time on now is our reimagined invoice finance offering. So we do have while we call it reimagined, it's a little bit different to your traditional invoice financing or debtor financing lending that you might know about in the market. From our perspective, it's web-based, it's online, digital for our customers. We connect directly via, obviously, our Intuit QuickBooks, but we also have that available for Xero and mild customers as well. We've got quicker turnaround times in terms of funding, and in some situations for small businesses, we have pre-approved limits as well. We do look for invoices from business to business invoices as well, which is really important to understand as well. But the loan size does move around as well. So depending on your customer's value of their receivables book, the loan will move around as well. Key features for us, data, not paper. So, some of our customers will tell us the amount of information they need to send or provide, or, when some of our other competitors might be doing substantial audits, we don't have that as a general course of action. And so definitely for us, it's about data and using data versus paper. Efficiency, definitely by using it directly and connecting with the accounting packages directly, it allows us to look at that data and value the receivables, if you like, and then determine what we would lend customers on the back of that. All our customers will generally use NetBank or Combiz, and I'm sure they may even be familiar to yourselves. We access Stream, our Waddle platform, through single sign-on through those digital channels, which is a really great advancement as well. And we also know absolutely that it is a market-leading solution. And how do we know that? We don't just hear it from us. You'll hear a customer video later today that talks about the support we've provided, but we hear it from people wanting to come and work in our business that might be working at competitors that really see what we're doing and actually want to come and join our business. And we take that as a really great message around what we're doing is right, and it's the right strategy for us to support Australian businesses. Whilst Stream is and a lot of our other cash flow products open to all sort of industries depending on the need, etc., we do see that it works best in those particular industries that are mentioned there: wholesale, manufacturing, road transportation, labour, wholesale and distribution. They're the key ones that we know customers are benefiting from Stream the most. So why are we different, and how are we different to traditional invoice financing, and why should you be talking to your customers about Stream Working Capital? As I mentioned before, no manual upload of invoices. So we directly connect with our customer's accounting package. We upload their invoices, and then we do what's called a take-on audit. We look at the value of those invoices, and then we automatically prescribe a limit to that customers can draw down straight away, in effect, after our internal credit process is completed up front. We generally don't have any audits, and that's a big saving for us, but also for our customers. But in some situations where there could be credit deterioration or something may have changed around, for example, proof of delivery, and we might want to go out and have a customer call, and we do that to a lot of our customers in general course of business, just having a customer meeting and talking through it. We may have a situation where we want to understand the customer's processes a little bit more, but we don't have set audits like our competitors do. No end of month recognition, so no emailing in of your receivables and having to cross-check on collateral reports. That's all done automatically via the platform, which is really great. And as I mentioned before, integrated into NetBank and Combiz, which is a single sign-on for our customers. So they receive a message when they're first connected to the platform. They accept, integrates with your accounting packages, and then provides analysis for us so we can turn around and approval as quickly as possible. And in some situations, as I mentioned before, there is auto approval as well for certain situations, which is really great. No waiting for funds to be available. We definitely hear from our customers, well, I want this loan. I've given you all my information on your receivables, and, my funding's not there and it can take months. Or I might need to say, my receivables book has changed. Can you change my limit? That's done automatically. So we call this sort of a dynamic business overdraft, if you like. So it moves around with the value of the receivables. So there's definitely no waiting for funds, and that's all managed through the customer's access to NetBank and Combiz as well. Substantial time saver, like our customers tell us, how much they're saving in terms of upfront audits, ongoing maintenance, which is really substantial, and that's why we've recently acquired the Waddle platform as well. and the ability for us to continue to grow our reimagined invoice finance offering and make it even faster and seamless for our customers as well is going to be key. Just move to the next. Sorry, my clicker doesn't seem to be working. Yeah, great, thank you. So I wanted to go into a little bit more detail on how Stream works before we share the demo with yourselves. So firstly, actually, we need to just jump back a slide. There we go. Apologies, my clicker's not working. With Stream Working Capital, so we talk through the application. So as I mentioned before, that connects with your accounting package, and your customer agrees to the data collection in that second stage. Then we connect, and then in some situations we will provide a pre-approved limit, and then that can feed into our also Biz Express fast digital pathway for small businesses as well. And then we look at servicing and other aspects, and then the facility turns on, and we move through that. So it's quite a seamless experience for customers. That's generally digital along the way, and there is a little bit of work we have to do behind the scenes for ourselves in terms of servicing and credit, but that's all done based on the information that the customer provides us. So they won't be asked for additional information that we can't get access to in the platform up front. Which is really great. But if we can just maybe hand over to the video demo, that would be really great. Thank you.
CommBank has developed a completely digital working capital finance solution that releases cash trapped in your invoices to help your business grow. We know that having a healthy cash flow is the key foundation of every successful business, and most businesses experience fluctuations in their daily cash flow. So fast access to a regular stream of funds can help you capitalise on opportunities and maintain your stable foundations. Stream Working Capital is an intuitive digital working capital platform that securely links to your cloud accounting software. You can unlock cash tied up in your trade receivables with access to capital secured against your outstanding invoices. With a quick and easy online application process available 24 hours a day, you'll have funding available to you when you need it. Let's get started. It's simple and easy to set up. You just need to give us a few details about you and your business. Then simply connect to your accounting software. You'll instantly see a potential credit limit, and if you're happy, click Accept. We'll then get in contact with you to finalise the legal documentation and any outstanding approval requirements. Once approved, you can explore Stream Working Capital dashboard to select which of your customers' invoices you'd like to include. Credit limits are tailored to your business, and your available limit will rise and fall in real time based on the value of your current outstanding invoices. The more customers you nominate, the higher your available limit could be. Use as much or as little as your business needs, and only pay interest on the amount you draw down, with interest calculated daily on the outstanding balance. Your loan balance is then automatically adjusted on a daily basis based on your customers paying their invoices. Stream Working Capital can help you manage your cash flow so you can focus on your business.
I really love talking about the customers that we talk to and the customers that we support, and receiving feedback around how outstanding our Stream Working Capital solution is. And so the first customer I wanted to talk to today was a staffing and recruitment company, and we really were able to help them out during COVID. So they had a substantial increase in terms of demand for their recruitment staff, and we actually had a big problem. They had a big problem in terms of cash flow. So they had to pay their staff on a fortnightly basis, but they were only receiving funding from their debtors between sort of 14 to 30 days. So a big cash flow gap, which they had sort of dealt with in the past, but as their demand was increasing, they had a major issue that they needed to solve. So we worked with them from a Stream perspective, and we looked at their invoices, and we managed to fund 80% of those invoices and really supported that customer. And they're a very big big advocate for us, and so it's really great to talk about them today as well. But we do have quite a few different industries that we've helped in different ways. So if we look at the manufacturer case study, so sort of similar, but their debtors had started to pay over a longer term. So we talked a little bit before around delay in invoices. So not actually paying past their invoices, but they just seen that potentially some of their customers needed longer terms to pay. And so we needed to support them with that. And likewise to the previous example, we spent time with the customer, we understood what their impact was for their cash flow, and we supported them through their receivables as well, which is a really great experience for them as well. And I wanted to have a look at the wholesale and distribution. This one's a little bit different in that sometimes customers come to us because they just don't have the bricks and mortar security available for another type of funding. But they have really good quality unpaid healthy invoices that we can help. So this was a different scenario around, well, they had the standard cash flow gap that they would normally have had, but they didn't have any security to support any type of structure outside of a receivables type deal. So we were able to look at the quality of their receivables and provided them funding off the back of that. The last one I wanted to talk to just before we go to our video is a transport and logistics example. So the customer transports fresh fruit to supermarket distribution centres. And I'm sure you can appreciate some of these facilities were set up during COVID and have been running since then. And some of those shortages that you might have seen or heard during that process around recruitment, etc. And this is another great example in terms of distribution of food where we could really step in and support our customers in that time. They had fuel supply, increasing wages. You remember how much wage pressure was put on and labour shortage over that time frame as well, which we're still seeing some of it now, lease payments, etc. And they supermarkets were pushing out terms as well and taking up to 60 days to pay for their invoices. So we really needed to step in and support this particular customer with their cash flow gap. And we did that again via Stream through 80% of funding of their receivables book. I think it's also important to note that whilst we're talking about Stream today, which is our receivables reimagined invoice finance offering, we do have other cash flow products as well that could support customers. But the reason why we're talking to Stream is obviously it's new, but it's also in small business. There's not a lot of major competitors will really support small business customers, so your customers, with receivables type funding. And so it's really important that we get the word out around Stream and the importance that it is, how important it is for our customers. But if we can just play the customer video, that would be great. Thank you.
My name's David Hewlett. I'm the director of Promo Gear. We're a Brisbane-based product specialist company. We do branded merchandise, corporate gifts, clothing and apparel, uniforms, anything with a logo. We actually started investigating the requirement of RAT kits within large government organisations. So we already had supply chain set up when the actual demand was at its highest. The growth at that point in time was enormous. It came very rapidly, and we actually had to pay for all of our stock up front. So needing that quick access to finance and cash to be able to secure orders was ultimately the way to get the order. So we required finance instantly. We needed some sort of form of peace of mind to know that we could basically flow through the growth comfortably. We started to really have to investigate things like procurement loans, where we got obviously loans per contract, but the timing on that was just not suitable. From the time that we actually found out about Stream Working Capital, we started to do a little bit of investigation, had a lot of communication with our bank representative. The process was very seamless, it was very simple and easy, user-friendly, and quite quick compared to a lot of other finance options that we've gone through. Stream Working Capital enabled us to very confidently and easily go in and actually compete for larger business straight away. It can be a matter of hours and you've got the funds. It only draws against what you select you want to draw it against, but having that instant access to finance and knowing that you've got the support network of the CBA business sector to be able to help you through that is perfect. With the platform actually having access to our accounting system, there's always that risk of our personal security, but once we understood the process, it was very secure, very safe, and we were very comfortable. Looking at the growth that we're expecting over the next sort of 5 to 10 years, we're definitely seeing that Stream Working Capital will sustain that growth comfortably over a longer period of time, and even allow us to increase our cash flow to deal with even larger organisations and larger businesses.
There's nothing better than hearing it directly from the horse's mouth when it comes to customer stories. And so we try to share as many videos as we can and insights via LinkedIn and other sources as well to make sure we're getting the message out of the importance of this product and the impact it's having on our customers as well. What I wanted to just mention before we went to questions, so get your questions ready, is how can you help your customers? So we talked about Stream, we talked about in the beginning the impact invoices are having, the stats, the importance of cash flow, how important administration is on the go, and the cash flow crisis even is something that I hadn't heard mentioned before. But this is really around how we can have that conversation with customers and with your customers and saying this is what's out there. So when you're looking at which customers you could potentially have a working capital conversation with, there's some things to think about. So do they collect significant receivables? Do they have an unpaid, healthy receivable book? Do they potentially have a cash flow gap where their payments and the receipts aren't matching? Are they in one of our key industries? Wholesale trade, manufacturing, road transport, labour hire and warehousing. And from a collateral perspective, as I mentioned before, unpaid healthy invoices and no need for bricks and mortar security. And potentially, are they also a supplier, exporter, customer or importer? Just have a think about the customers that you look after and if there's anyone that you should be having these types of conversations with, and we're here to support you where we can. So I encourage you to go to our website. You can put inquiries in there if you want more information for your customers. The videos that you watched today are also available there as well. And there's lots of information that you can find on there to support yourselves and your customers as well. Grant, I'll hand it over to you for questions. Thank you.
Thanks, Elizabeth. Thanks very much for that session. Folks, as Elizabeth mentioned, if you do have any questions, jump in and slot them in the Slido panel that's in the bottom of your screen there. But Elizabeth, one I did have, the Waddle platform you mentioned and the acquisition there. How is that acquisition kind of playing out currently, and what are some of those benefits for small businesses? And I guess, from an accountant or a bookkeeper's perspective, if they were explaining it to their customer, how would they kind of put it? How would they put those benefits?
Yeah, the main benefit for us is actually that we now control the platform and we decide on its destiny, if you like. So we know for small business we have to be really quick and we have to be easy. And so having that platform embedded in the group means that we can prioritise enhancements and make sure that any changes that have been made are to make our offering even easier and simpler for our customers.
Great. You did touch on this, but I guess working capital, cash flow management more broadly, resources that the Commonwealth Bank have, they'll be all on the website. Is there a specific section they need to go to or someone they need to contact to kind of help out their clients on those?
There's a huge amount of information available on our website, but also via the CommBank app. Our website in particular has got things like the cash flow forecasting tool, which I know Intuit QuickBooks have a version of that as well. There could also be access to grant information for our customers, insights as well, all our product offerings, and then an opportunity to actually engage with us that's best suited to customers. So whether it be digitally or requiring a phone call so that we can actually reach out. But there is a lot of resources available there, no matter whether the small business is at sort of start, run or grow stage, huge amount of support in there. So that would be my number one suggestion would be jump on there. There's a lot of resourcing there, and then reach out via our website, and we're more than happy to engage with you directly and your customers as well.
Great, thank you. One for me here on the progress invoicing tool that I mentioned in QuickBooks Online and where you actually find that. So you'll find the progress invoicing feature in your client's QuickBooks Online subscription. If you go to their settings and the sales tab, there's a section in there that's just headed progress invoicing, and that'll allow you to set up progress invoicing with them, customize it based on the projects that they run and how they actually want to be paid based on their stages of work. We are looking a little bit light on other questions. So folks, if there's any final questions for myself or Elizabeth, throw them in now or forever hold your peace. No, we might wrap it up and give people a couple of minutes back in their days to rush up and get some lunch. I know it's definitely getting to that time for me. We'll bring up the final slide. We do have just a little legal disclaimer on the information that was covered today. Elizabeth, if you just want to kind of highlight the gist of that, please.
Yeah, thank you. Yeah, so we do need to finish with disclaimer, but the main thing to be aware of is obviously, our solutions are tailored to customers, but we've talked more broadly today. So if you've got a particular customer that you want us to have a chat to or you want us to get involved in, please reach out. As I mentioned earlier on, we do have a number of cash flow products available to support small businesses. So it's really around connecting in and finding out what's the best product and how we can support, whether there's bricks and mortar security, whether there's unpaid healthy invoices, or even in some situations unsecured. Please reach out and connect with us, and we're more than happy to help where we can. Thank you so much for having me, Grant.
Thanks, Elizabeth. Thanks so much for your time. Folks, that's it for us today. Thank you so much for joining us on the call. We'll have a copy of the recording out to you by email, so watch out in your inbox for that. We'll also link to some more information about the Commonwealth Bank Stream product in that email. So yeah, check your emails in coming days for that. And we look forward to seeing you at the next Pro Power Hour next month. Yeah, thank you so much.